Well, gang, this has sure been an exciting week, huh? It is March 13th, also happens to be Friday the 13th, for those of you who are suspicious. Superstitious? Superstitious. Whoops. I'm suspicious too, maybe. Maybe suspicious, but not superstitious? One or the other. So, welcome to Forward Focus. Yes, if you have any questions, feel free to post them at any time. And basically, I try to go back and work in as many of the questions as I can during our session. So any that you might have, just feel free to stick them in here in the chat box. All right, guys, so the first thing I wanted to share with you is we've had a lot of people questioning with emotions and risk management and all of that stuff here right now. And so I wanted to put this offer out for those of you that haven't read it already. It's a book I wrote about 10 years ago, but I've updated it over the past year. And it deals with a lot of discipline and risk management and how to adjust your risk as market changes, but it also lays out the foundation for my type of trading. So especially if somebody is new to the markets or newer to the markets and you want to get them off to like a good technical start, this has a lot of really core basic information, things like I'll talk about with trend development and momentum. Those are discussed in here in layman's terms. So it's something that's a really easy read because I wrote it, speaking to the everyday person, not speaking to somebody that has like an MBA or anything like that. So I think it's a good place to start for those of you that are asking that type of question. Um, and has a lot to do with like overcoming some of those emotional hurdles and things like that, and how you can keep a trading journal, how you can make it really easy so that you're not like overwhelmed with things, and how to analyze it. So that's a big part, is like, how do you actually analyze your trading journal? So that is covered in here. So you can get the ebook for $7. They still do the print copy, but it's the older version. And I think that's like 20 or something like that for a print version. But you can get the ebook directly from me for 7. So that is the link there, and it's available in a couple of different download versions. So if you find that you're having trouble with it being supported on one of your devices, then we can also send it to you in a different format too. So let's flip on over here and get started. I've gotten like the feeling a number of you are a little bit shell-shocked right now, and then others of you are totally blowing it away right now. And a lot of it has come down to emotional aspects of trading, not as much the technical aspects of trading, because when it comes to the technicals in the current market right now, the market is holding technicals really well. And in fact, even the entire movement that we've seen in the market is just a 2T pattern on the larger weekly time frames. And we're going to go over that again here as we get started. I'm first going to begin by pulling up a template of the 2T for you. I think it's really important we go with that as a starting point here. So this is what a typical 2T looks like, you guys. This is a pattern that I have been trading for many, many, many years, and have, altered and adjusted as my understanding of how it, unfolds over time, plays out. And what we see is that there's tons and tons of variations of this strategy, but they all come down to like the core basic idea, where what we are looking at is a high, a pullback, well, first a move to a high. This is often a two-wave move. A move to slightly lower high, a pullback, and then a move to a slightly higher high, where we have measured secondary waves here. Now, what we can see sometimes is that we will have these on an accelerated path. So we will get something like this where it goes to a high, it pulls back, it comes up, it breaks this previous high, we get a little pause, it goes up again, and then we see things turning around, sometimes with momentum shifting, sometimes not, but we'll have basically a steeper version of it. So what we're looking for is that at that point, for momentum to really slow and shift. And when we go and we look at what's happened in the overall market, I'm going to now pull that up here. Here's our QQQ. Here's the monthly. So what you can see here, I'm going to kind of widen this up a little bit, is that we have that 2T pattern right here. So here's the move into the high, the pullback, the move back into the previous high. It goes to a slightly higher high here. Two-wave correction here, which is also really normal. And then the second wave up. And this is what we have been following for months. And I do mean month, actually probably about a year, because we've been looking at this potential since all the way back here. The reason we were looking for this potential back at the beginning of last year was because it made it back up to that high with this V pattern. So when it does that, as it starts to come into this zone of this previous high, if there's no major correction in here at that midway point, then we are typically going to see this try to go into a longer correction as it comes into that previous high, and then it can go and do a second wave. Now, there's other patterns that can happen at that location. So sometimes if there's no stall there, it can go and it can go into a megaphone. We can see that happening too. So the key to confirming the possibility that we were looking at the beginning of last year came from the fact of how it ended up correcting here. It had this two-wave correction on this monthly time frame where it held at that upper level of this previous high following a V. Those of you in League of Traders, what are we also calling this pattern? Just this portion of it. Bingo, check mark. Basically, it looks like the square root sign. So you're looking at the pullback, the move up, and the base, and then your trigger for buy is that channel breakout. And what we're looking at as the first main target on that move is a measured move here to here. And so this is where we were really starting to tighten things up over the last couple of months for exactly how far can this go. Sometimes it can manage to go to like a 123.6% extension. Sometimes it will hold the 100% extension perfectly. It all kind of comes down to where the momentum is as it's putting in that last portion. Let me drop down to a weekly time frame here now. So here's our weekly. I'm going to kind of squish this back up again. And I am going to put our Fibonacci extension on here. So we've looked at this a couple of ways over basically the last 6 months or so for where exactly this could go. We started out with, since this was kind of going into a bit of a symmetrical triangle, we were originally looking at it like this. And what you will notice is that as this comes up here, here's the 100% level. We're not at a measured move on the second portion of that. The measured move's a little bit higher. So that told us, you know what? We need to start looking at that next pivot low. But what I want you guys to see here is I'm going to mark this. This is the 138.2% extension here. Now what I'm going to do is I'm going to move this. So here's the main one we've been following. And whoops, I erased my marker there. Let me put that back on there. Not sure why it didn't stay. Didn't think I erased it. But there's our 138.2. See if it does that again. There we go. Now look at what we've got. So if we look at the 100% here on the 130 or 123.6, we're still in that zone here for that resistance level. But now at this point, the 100% is darn close to this measured move here. In fact, this might have been a little bit over 100% there, but we're really close to that measured move. It's just that the momentum hadn't quite shifted there yet. So a lot of times we'll get like one last little push. Sometimes it's a blowout type of move. Sometimes it looks like this, where we see this more at the lows. Let me show you how this often looks at the lows. It'll go the 1, 2, 3, and then it will start going and it'll kind of look slow and it'll go bam and pop back up. And for those of you in League of Traders, this is one of the reversal trades that I took on gold the other day. Exactly, we call it a blurp. It's a flush. It's basically flushing people out. And it's funny because a lot of times it's really extreme. It gets a lot of momentum involved in it, especially when we see it happening at lows, because it will look steady, like, hey, this channel is going to break at any moment, and then it will just flush, and then people forget about it, and then it will break, and then it will just keep going. And that's what we had happening over here on the other side. So feel free to go back and review those forward focus sessions, because it's going to help give you an idea of, hey, what were we looking at before this actually happened? Now, when we go down to a 2T again, I'm going to go back to our template here. And we're going to spend most of this session looking at this because I've had so many people that have contacted me here over the last week or so, and they're like, how did you know that was happening? What are you doing? What do I do now? You know, it's kind of overwhelming to see that happening to so many of you guys. And you know, we've gone through this back in 2000, 2008. It's funny because a lot of people bring up 2008, and I don't even remember that being as bad as 2000. Maybe my memory's a little bit off, but that's the one that people seem to remember the most. And I'm like, you know, this happens a lot. The most recent one that we saw this happening in was Bitcoin. Remember, we were talking about Bitcoin when it was happening too. That was going into January and February when the Bitcoin had the same type of thing happening. And if you go and you look at that market, that can give you an idea of the potential of what we could see happening now in the overall market. But let me go back to this template here. So on R2T, this is a level right here that we are calling T2, and that just stands for target 2. And the reason we call it T2 is that the channel itself here, the lower end of that channel is what we call T1. So in a strong upside market, if you get a 2T, then it might come back down to this level and then still keep going, especially if it's something that's just starting to come off of lows. In a market that's more exhausted though, the midway zone right here between those two waves is the next level of support. Let me show you the cues again. Where are we right now? we're right at that midway zone. The difference here is that it has hit it really quickly. So we have come down into here with a pretty strong 1, 2, 3 type of move, really massive momentum into this zone. Now, why this is important is because as things come into these levels, if they hit the upper end of target 2, which we can see kind of did over here, and they do it with really rapid momentum, they will almost always come into the middle or lower end of that zone. And that's what we've seen happening over the course of this past week or so. We've seen it pull into that zone. Those of you that have been studying the 2T, no shocker at all. The shocker comes from the fact that we have not seen this to this degree on this large of a scale. Now, we've seen 20% corrections, we've seen that type of movement, but for most people, they've never been through something like this. So what's happening is the patterns are still out there. They're still working perfectly. The return compared to what the risk is still perfect. The problem is people are taking the same amount of shares or contracts as they were before this increase in volatility, or they didn't make the adjustment fast enough, took a number of stops in a row, or they're not cushioning their stops as much. Also, what we're seeing is that because of the increased volatility, people are putting a lot of panic orders on the books. What this does is that when you put market order stops and things like that, they can take you out at those extreme prices because they've got orders coming up at those levels. So it means that if you're a day trader or a scalper, it's easier for you to get smacked around a bit. Now, what we've seen, for example, is that the micro NQ is trading a lot like the E-minis were a couple of months ago. So if you were trading just the micros and you were only on a couple of contracts, this could feel insane because you might be looking at the same time frames on tick charts for the same patterns when really you've got to be going up to bigger tick chart time frames. People ask me, hey, what's the best tick chart to use to trade the NQ or the ES or something like that? And the answer is always what? It depends. It changes. It's not always the same. As volatility increases, as we see more and more trades coming across, you've got to go up to a bigger time frame to get similar types of trends where it's less choppy. And so you've got to make that adjustment. And one of the ways that I have adjusted to the market is that I haven't been trading the NQ as much. I've been trading oil and gold to some extent too, because those have been smoother. I've been able to keep very comparable stops on oil as I always have. So the number of contracts I'm taking on oil really hasn't changed a lot because I'm still looking for the small setup inside of a bigger setup and building into the positions. And you can do the same thing on the MNQ, but you've got to look at the multiple time frames. And if you only see a setup on a smaller time frame, you need to have it in the correct placement in the context of the larger time frame as well. And this is where so many people get lost. And as I've admitted to you guys over and over again, I've done the same thing. It's one of like the things that I've had to work on for years to overcome is making sure that just because I see a setup on a smaller time frame doesn't mean I should take it. I need to assess what my risk is on that larger time frame. Because here's the thing. If you are on a smaller time frame setup and you've got that bigger time frame setup backing you, even if your entry is not that great, your odds of getting flushed out are dramatically decreased because you're getting in on a move where people are then starting to panic or get super excited and jump in and pile into it. You're not at a zone where they're starting to question whether the trend has gone too far already. So that is what you have to think about in the current market and in those circumstances. Look at the larger time frames and make sure that just because you have a setup on a smaller time frame, you also have it on the bigger time frame, especially if your advanced trade management skills are kind of shaky and you're still working on them and you're not always sure when you need to be tightening up how you place your stops or where you should be getting out of your position because market circumstances are changing. If you find you're somebody that either just holds for targets or takes a stop or bails because you're not sure where it's going, make sure those larger time frames are in your favor because you will get creamed in a market like this. So that is my little bit of advice here that I know I've given a number of times over the last couple of weeks, but I'm just going to kind of like keep pounding it into your head. So forgive me if you keep hearing it over and over again. And even if you didn't heed that advice, you can change it. From this second forward, you can change it. You know how many times I had to start over, basically starting over, or felt like I was starting over and trading over the years? A lot, especially in those first 5 to 7 years. They were tricky. Sometimes I'd be like, yes, I got this thing. And then there would always be like one or two things that were generally just emotional type of things that I had to overcome and mistakes that I would just keep making. Yes, I'd make them less often. Yes, they would start to be less extreme, but I would still make them. And it's a lot of pounding things into your head. And that's why I put that book up to start with, because it outlines a lot of the things that I did to overcome the mistakes that I was making and to help me get back on track faster and stay on track longer. And if I would go off track, get me back on track. So I try to make it really straightforward, not something that is super complex and difficult for you guys to do. But one thing that I've noticed is that even if you just go and read material or study material on methodologies and stuff when you've messed up, maybe you've taken a couple stops in a row and that's as far as the extent of what you've done, it can help reset your brain and reset your emotions and get you back into the right mentality faster than if you just go and walk away and say, I'm having nothing to do with the markets here for a bit. So I found that that's what has helped me. you know, I'll walk away, but then I'll come back and try to figure out what happened, what mistakes did I make, and how can I not make them again? And just repeating it over and over again. It's like those of you that are learning like instruments, you have to do the scales, right? That's what you're learning. It's like you're learning the scales. And sometimes if you're going back or you're like maybe you play sports and you had an injury, right? You've got to start a little bit slower, but you still need to go through the motions to get back up to speed again. And sometimes it's a little bit of physical therapy to get you there, but you can definitely get there. So I don't want anybody to feel discouraged at all by what I've been saying, because I've been here for since late 1996. So you do the math. It's been a while. And I've definitely seen a lot of these type of moves in many, many types of markets. So the question is now, where's this going? What can we expect from the market ahead? And what can we do to prepare for it? So if you've got like IRAs and things like that you're really worried about right now, you can put on hedges with different instruments. You can look at different sectors and even like different ETFs. This is where some of the Forex markets might come into play. Um, I don't know what you guys have for like restrictions for like short selling and things like that. You've got to look at that every account is going to be a little bit different on restrictions for that. But there's even things like the SQQQ that are basically the inverse of the Qs. And there's different versions of these inverse ETFs now. They didn't have this back in like 2000, but they do now. So let me show you what that looks like, for example. So here's what we're seeing on the weekly of the inverse. So this is the Ultra Pro Short QQQ. So some of them are weighted differently. So you want to look at that. But notice that as the overall market's gone down, this has gone up. So if you are long, for example, the Qs in an IRA, you can't short, you don't really want to get out, look at how the movements compare and put on a trade in one of the inverse ETFs that's kind of going to hedge you so that it's like I've talked about sometimes with positions that I'll have on the E-minis. Now with the micros, what I will sometimes do is that if I know a correction is going to happen, or I think the probability is really high that a correction is going to happen at a certain level, I'll go and take an inverse position in the micros. Sometimes I offset it 100%. Sometimes I offset it partially so that as it corrects, if it goes down, let's say maybe 10 points and I've offset it by 50%, then I'm really losing like 5 points, So that's something that you can think about in the current market. That's one option. You can also, for those of you that are options traders, you can look into that too. My concern with options right now, it has a lot to do with the volatility factors of it, and I am not an options expert. So I cannot tell you, what I would do with regard to what the um, options are, what the options are, you know? So I think, maybe I need to have somebody come in and talk about that with you. For those of you that do options trading, that might be something that we discuss here coming up. But that is another place that you can look at. Cash also, you guys, is also a position, a totally valid position. I know that like everybody has heard this before, but a lot of people don't really hear it, and it is an option. So I know some of you, in fact, a number of you, for example, when I said, hey, volatility is increasing, this is a much higher risk environment, some of you have gone to the sidelines. So you might have been trading the micros and you flipped over and you flipped over into sim trading. And it's a perfect learning environment right now, you guys. So you don't have to think that, oh, wow, I'm just sitting on the sidelines and doing nothing. Use the market right now to learn the strategies because the patterns are still there. It's just that you might not be able to stay within comfortable risk parameters right now. And that's what you can be doing right now. So think of it as, basically like your if you're in college, you're taking, your summer breaks or whatever, you're kind of switching gears to what you're doing. You're no longer paying your tuition and such, or maybe you're working on campus and you're actually making money. That's what I'm hoping for. But you can still use that time wisely. I know some of you are saying, yes, I'm enjoying my cash. And then some of you are trading like short term in your IRAs right now and sitting in cash on your longer term stuff. So, yep, that's exactly what you can be doing at the moment. What you don't want to be doing is trying to be a bottom picker. So, a really crude analysis here. Uh, I bring him up, friend from, yeah, guilty, friend from high school, or not even high school, all the way back from elementary school. I grew up next to him. He asked me a week or so ago, he's like, hey, do you think this is a good time for bottom picking? And, us joking, where I'm like, well, you know what happened to Harvey Weinstein when he tried to touch too many bottoms? Like, this is not what you want to be doing. So then he messages me a couple days later that he's trying to channel his inner Harvey. I'm like, oh my God. So then I'm like, this week I'm like, okay, he got 23 years. Like seriously, you guys. I know. Bad joke, right, you guys? I'm sorry, but hey, really old friend here. We don't always make the most PC jokes. So, yeah, I'm like, Harvey, what are you doing? No. So, yeah, that is my lesson for you. Don't try to channel that. It's bad, bad, bad idea. Okay, so back to being more PC here, right? Um, what we can do though is you can watch for the market to make shifts and adjustments. So what usually tends to happen when we're coming into lows where things start off really extreme is that we go in waves like this. You'll get the really extreme move, you'll get a less extreme move, you'll get an even less extreme move. It took you a few seconds to take a little bit of time to catch that joke. Yeah. So what we'll see is things will slow. We'll still get the extreme start, which is what we've got right now. Then it tends to still keep going. So we were talking about gaps in the overall market over the last couple of weeks in League of Traders. Well, you know how gaps bring in that like panic and excitement and everything like that? The same action that we've been talking about in the gaps are really going to be effective on these larger time frames in the overall market too. A lot of you guys are like, yeah, that's my humor. Sorry for you, those of you that it's not. Yet we have a number of you that did go to sim trading, and I'm really happy to see that. And for those of you that didn't, please do not beat yourself up too bad over it, because I'm telling you, I have done the same thing on situations where I knew things were getting a little bit crazy and I should be on the sidelines and didn't go on the sidelines or didn't go fast enough. It is something you can overcome. It is something that I have overcome. It does actually take a little bit of beating yourself up, but you realize that, you know what, you can come back from it and keep yourself from repeating it, or repeating it to the same degree. I say repeating it to the same degree because, come on, let's get real. How many of us have done the same thing over and over again? And it's like it takes a few times of touching that hot stove before you realize, you know what, maybe I really should wear an oven mitt or be a little bit more cautious and not touch it again. I mean, come on, I've told my son a million times, don't get too close to the stove. You're going to get burnt. You're going to get burnt. Psh, what do you know? Goes and gets burnt. Goes and gets burnt again. Then he's a little bit more cautious and maybe doesn't get burned as much. It happens. So we're all human. We're all going to be making the same mistakes. And I really do not know of anything that you guys have done that I haven't done to some degree. Richard is saying, yes, you knew two people that blew out their accounts on Monday trying to pick the bottom. That's exactly what I'm talking about, you guys. So I know if you'll notice, like even like in the forum, like things have gotten oh gosh. Things have gotten a little bit kind of subdued in there, and I'm like, oh, you guys, please don't feel too bad. You're gonna make it. It's gonna come back to you. Don't worry. We've just gotta stick in there and use the time for learning and refocusing. And if you look at what's happening on gold right now, we're even seeing some of that momentum shifting happening on like a 200 tick chart. And I want to show you guys a chart here on oil. So I'm showing you, what happens when we really do see lows happening. So let me show you an example here on what's going on with oil here. I'm going to pull up this chart here. And this is oil. on the 1 minute time frame. And what you can see here is that, this is giving us a bigger breakdown here. And what we had over here is the market tried to recover. It even did a shallow phoenix where we get like a slower two-wave start, the two-wave correction, and then pops faster. But it didn't keep going. It shifted momentum again and then went for another breakdown. Watch this, because this is a clue that we'll get another leg down. Now, as far as the lows though, look at how this came into this low here. You have a really sharp start. You've got a little bit of a continuation. It's even sharp here, and then we get this shift down here. So that shift is indicative a lot of times of something that's going to offer a bigger pop. Now, so sometimes in the market, what we'll see is that it will range back and forth like this. It will come up to the upper end of the range and kind of base along there and pop up. A lot of times in a bear market or where people are really scared, it doesn't congest at that upper end. It congests at the lower end and just never breaks that lower channel. So it'll break that upper end of the channel, pop and break through the channel. So that is what we will see, but you still have to use caution getting into these type of setups because they might still be a smaller correction in a larger downtrend. So you want to see this happening not only on like an intraday time frame or a daily time frame, but for the overall market to really hold, you'd see that happening on a larger scale, the weekly, the monthly time frame. And notice that this little move here, it's very small compared to this entire downside move, right? So even though you might get a nice recovery short term, so if this is a monthly time frame, hey, that could be a good 6 to 9 months of upside. It could still come back down and widen up that range on a bigger time frame so that you get the momentum shifting on a larger time frame. There are recoveries in the market where you will get V bottoms and it will manage a recovery. Usually you will still have something like this happening at this low on the smaller scale. It just won't then play out on a bigger time frame. But your risk is higher on that. So it's usually something that I will build into instead of just taking an entire full position for a larger time frame reversal. Because what tends to happen is that in a V type of bottom, what you'll get is you'll get that move down. You'll get that little tiny shift. It'll come up, it'll do things like a phoenix and then maybe another move. And then here's where it decides. Am I going to go or am I going to go? Which way am I going to go? So it will start out a little bit slower and then it can just ramp up speed coming from that. But if that channel breaks down, the odds of it eventually ramping up speed are going to be really slim. So this is why a lot of times you'll watch things like Fibonacci fans on this rally. And if it breaks the 76.4% fan, where first low could be at the 76.4, second low could be at 76.4. If it breaks that 76.4, it's probably going for another move down. You might even get it starting to do that upside and you might think, oh, hey, it's great. It's ready to go. And then it turns around. You don't know really until that upper channel breaks and the momentum confirms. So at that point, it's not really a setup for a new setup unless you look at the entry triggers that we talked about in League of Traders this week. So go back and review those videos because we talked about how to enter as this type of a correction is ramping up. So here's one example back here where it does more of that V bottom. And notice it popped up, one correction, popped up, second correction. It didn't quite go right away though. It still held the zone for that channel. It didn't break the previous lows really, but it had that same hold level where then it was able to ramp up, but not really strongly. So in one that would take off better, it would hold right about here and it would start to go. So the fact that it actually went out longer really spoke to this could, even now in the breakout, still turn back around. All right, so this is the main thing I wanted to talk to you guys about here today. I'm going to show you that updated chart on this so you can see where oil is right now. And then I'm going to go to your questions. So here is the low we were talking about. Here's the pop. Here it comes back down and retests. What's interesting here, notice this flush to the lows traps people. It takes out the stops underneath that base. But we're still seeing that rounding trying to go here. So this still has potential that this can move up a little bit further, but we have to keep in mind the bigger time frames. So look at what's going on the 500 and 800 tick charts of gold and oil here. Pretty good, strong downside movements. So there's certainly risk for retest of lows, even on bounces at these levels. So keep that in mind. Is it possible to look at a yearly chart on Ninja? It is, yes. So what you might have to do is change how many data points you have. So to look at a yearly chart, you would, oh, actually, you know what, yearly on Ninja. I guess I've looked at monthly on Ninja. I don't know that I've looked at yearly on Ninja. Let me check. That's a good question. Sorry about that. I was thinking monthly, but I'm not sure. Usually when I'm looking at yearly data, I'll go back and I'll look at like inflation adjusted charting. Let me pull up the year. Let's see here. Monthly. Yeah, I'm not seeing yearly on these platforms. You can get yearly online though. Most of the free charting will have yearly. Let me pull up. You think TOS does? It probably does because TOS has a lot of IRA accounts. So that would be my guess too. You know what? I'll pull that up next week because it's going to take me a second to go and look up larger time frames. John says he's pulling up yearly. What are you looking at, John, on Ninja? Yes. Let me see if I type in. I don't have my Ninja Trader open on this computer, so I'm going to check this on another computer here. So if I do, I wonder if it would be like one. Yes, one IR. Nope. Yeah, you'll have to do a screenshot of that for me, John. I have not looked at it. I've just pulled it up with data series. Oh, I see it now. Okay, here we go. I've got it. All right, let me switch this over to the NQ. So yes, a Ninja Trader does have yearly. I wonder how far back I can go. Right now it's only showing me 2004. Are you able to get anything back further than 2004? I'll let you guys play with that here while I go through these other questions that you have. Oil, do I think oil has more downside? Yeah. I mean, the way it's looking. Grab a. So the thing with oil is it's probably going to start to chop around though, because it had that huge gap and it had already been selling off into that gap. So a lot of times that leads to chop for a while. So let me show you guys the oil chart for the monthly time frame. So here's the monthly on oil. So we had that check mark breakdown here on oil, but this was mostly through a gap in here. So this can still head lower, but it could more likely chop back and forth. So we're probably not going to see as much of like a strong trend there. And that's what I think it's trying to play out right now because it's kind of in a range right now. So I think it's trying to make that decision. But intraday, what happened is that it had two waves up that we were looking at, and then it went into an avalanche. Let me show you guys those charts from League of Traders here. Kind of got to scroll back to when it was doing that. Where's our gold breakdown the other day? We were looking at that setup on gold. There you can see a gold breakdown. Here, this is what I wanted to show you. So here's oil. So here's that gap. Two-wave measured move down. Here's that little shift that I was telling you guys about. And then see, in this case, the two waves were a little bit shorter, and then it did the massive momentum move, but it's that same idea. That little shift is what can help bring in stronger movement. So if you don't have that little shift, it's harder for it to get a really solid bounce coming on. Even with that shift here, notice that this didn't get that bounce going because this is the first pullback coming off of that high. So this is the type of continuation a really strong move can have. It can have that whole shift in momentum like that, bounce, but then that bounce might still even go and falter. So it can give a reprieve to the selling, but it might go and lead to further selling later on if the larger trend has it. So in this case, that 2T setup that I showed you guys at the very beginning of our session, that's what triggered here. So we had the short trigger for the 2T coming on here. And here's an example of that extra kind of little flush down there, where then the channel breaks, it still pulls higher, but it was still flush. So overall right now, I'm really cautious on upside moves. We are seeing good intraday upside moves because we're getting some reactive type of moves. Basically, we're seeing those in every market right now. But they can really easily trap people too if you're looking for more than an initial impulse move at this point. In fact, gold just did a good example of it. Let me show you gold on the 200 tick here. I mentioned gold was trying a little bit ago, but let me show you the chart of how that's been playing out. Oops, I'll go all the way back down here. So here's gold. So I mentioned as we were, earlier in the session that gold was starting to have the potential to get a reversal forming. And what we had was a measured move down in here. You can see that extra little shift here, but notice how this just did this bounce here, and then it went and widened up and then shifted and did a bigger bounce. So this is what you've got to watch for right now because the trends are so fast and steady on the downside. They can still go lower, but give us a bounce in the middle. And this is where bottom feeders are going to be trying to come in, and then they're going to get trapped. And that can lead to these further lows. There will be exceptions where things can flip and turn, but they usually overall won't be a steady trend move like we see on the downside. You'll see these bigger corrections happening. The momentum can shift. It's just a little bit more difficult to get that totally flipping around. All right, so a couple other questions here on eBay, or not eBay, Etsy. Let me go grab Etsy. Oil, as you guys will see, is still holding that low that we were just watching. So it's kind of showing you how that turnaround. So I said, hey, oil looks like it could still go higher. That's what it's doing. Let me show you the upcoming resistance levels to watch though. So this is going to help you when you do come off of the lows on something. And then I'm going to go pull up that Etsy for you. When you are coming off of lows, see how that rounded, that W formation, and then the Phoenix over here helped this turn around. Now this level over here is going to be resistance to watch for. So when you do get the bounces, watch for those midway points with those previous things that were support. Those can be resistance on the way back up. But something that rounds off, that has a better chance of doing a stronger move. And in that case, this resistance would be a stronger resistance level. So you watch for the pivots. If the momentum is rounding faster and gain speed, watch for the upper level of T2. If it is slow and steady, watch for the lower level of T2, target 2. Okay, Etsy. Okay, so Etsy here, what we've got is the formation on this monthly time frame, where a lot of times this is going to keep going down. So since this didn't have just like a nice two-wave move up, we've got kind of an extra shift in here where this is like your blowout top thing going on. So it's really telling you, whoa, we don't know quite what's going to happen here. We're kind of a little nervous on the upside. Blows up. All of these people that got trapped here, now they're panicking here. So let's go down to a smaller time frame. So here's our weekly. Bull trap right there on the weekly. 2 waves, megalanche formation. So here's our 2T formation over here. And this got off to a slower start because it had that extra push. It was really sharp to the upside, so it went to a shallow avalanche. And then the 2 waves down. Here was T2. Here's target 3. The 2 waves, and then the trap, the bull trap. Now with this bull trap, this is probably going to keep going on the downside. So let's go look at this on the daily. So a daily on here, what we're looking at is support down here. So we've got a little bit of a exhaustion / runaway gap. So you've got your first initial, second, this was your trap up here. Then you've got this on this. This still has room to pull down into this zone here. So if the momentum had been slowing into here, it would have a better chance reacting off of that low. When it hits it hard and fast, it's more likely to pull into the lower end before you get a reaction. So on this larger time frame, on those on the long side, I would really look at, any upside opportunities intraday to get out of it. Let me see here what we got on the intraday charts. So gaps like this are struggling to hold. We can see the avalanche over here is basically a head and shoulders. So this was another bull trap right here. So with what we've got going on right now, what we've basically got going is like a little bit of relief buying. You can see that shift in the momentum here intraday. But remember what I said earlier, where just because we get that series of the 1, the 2, and the 3, and we get a recovery, doesn't necessarily mean it's the end of the downtrend. It just means that we can get a really fast pop. But a lot of times that fast pop might just be a single impulse move or 2 impulse moves, and then it will go and turn back around again. So that's really what we're seeing happening here is this is probably going to go into more of back and forth. So the momentum on the downside is going to shift, but it still has room to go lower. So when you're seeing this type of thing happening in the market right now, and I know a lot of securities are doing this type of thing, keep this scenario in mind because that's what is the highest probability right now. Bitcoin. I always get this backwards. So see the Bitcoin over here? How and kind of gung-ho like that? That's what a lot of securities have done. And then this pattern, what's this pattern, you guys? League of Traders, what do we call that? Yes, a mega lanch. So it is our megaphone that is a continuation on the downside. So it's our 4-point megaphone. 1, 2, 3, 4. Since this had 2 waves down here, it is a type of avalanche. So we call it a megalanch because it's a megaphone avalanche. And so same type of thing. The drop into that support, hit it, can bounce around more in here now. This is a weekly. Let me show you guys the daily. So here's the daily. That's a bull trap there. And this is what we can see where the overall market can be at levels like this. And people will think, oh, hey, it's a 2-way pullback into support. I'm going to buy it. Yeah, ouch. That's why I usually just play the shorter impulse moves on these recovery moves. And yeah, it might build into a bigger recovery, but anything that I'm holding longer term, I am keeping my risk pretty minuscule on something like that until I actually see a shift in momentum, like here, where we get a good shift to tell me it's going to strongly reverse. All right, you guys, this is all I've got time for here today because I've got an appointment, but I hope that you learned a lot. I hope I've reassured some of you or helped some of you feel like, hey, it's not hopeless. Just because the market's in a phase, it is a phase. This market will come out of something like this. It's not going to stay like this. It's going to get into a point where we're going to see them settle down. But it might take a little bit of time. So you might need to get used to trading in this environment right now. And that means changing how you would adjust your risk. There's absolutely a recording of this. I will get this up on YouTube for you guys. The question on Donna is why aren't bonds and gold going up? Because they are usually security level, right? Well, bonds did go up initially. Bonds actually went crazy. I'm going to just cover this super fast here. So bonds, look at that. Bam, straight up. Problem we're running into right now, well, of course, we saw yesterday, was yesterday the market or the Fed flooded the market with what 1.5 something and yeah. Anyways, let me grab a link for you guys. That will summarize it up for me. 1.5 trillion, oh, 1.5 trillion, a half trillion. Oh my gosh, it was some obscene number. I'm not great at numbers off the top of my head, remembering those numbers and names, but I can see patterns perfectly. I'll remember a pattern for years. But let me grab a link for you. Hold on. Um, do, 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 do. kind of a good explanation on Bloomberg here. Copy link, posted in chat. Okay, so I just posted a link in chat for you guys. You can see it up here. So this is one of the ones that'll kind of help put in perspective what they're doing. Also, what we're seeing with regard to gold and such is that with all the margin calls and everything like that, people are having to liquidate gold positions. Not people, but like institutions, like governments and banks. And that's why we're probably seeing a bit of a drop here on gold. So even though it's like traditionally a security blanket, well, sometimes you got to dig in and use that security blanket, right? So that's what I think we are seeing here on gold. So yeah. All right, all of you guys, you have some other awesome questions here. So send them over to me because what we're going to be doing is David and I were chatting earlier. David's one of our League of Trader peeps. We're going to do some interview type of stuff so that we can answer some of these questions for you. Harvey pointed out, yes, gold is an inflationary hedge. Exactly. So, you know, you've got that aspect of it. It's not necessarily a hedge against the market going down. I mean, even this question came up the last time too, because I don't think gold performed like perfectly as an inverse the last time around either, that we had a big market correction. I'll have to go back and double check, but memory serves me, it wasn't. So yeah, margin calls in oil pit equal gold liquidation. Yep, exactly. They are using it to cover other stuff. All right, you guys, have a wonderful weekend. And yes, I'll grab that. The link for the ebook is just tonyhansen.com/ebook, but I'll put that back up here for you guys too. Those of you that asked, I'll stick it in the room also. www.tonyhansen.com/ebook. And I'll go back and keep that up here for a couple minutes so you guys can grab it. And yep, as Harvey mentioned, bonds can only go to zero. Can't go past zero. Oh, thank you guys. I am glad that you were able to stick around here today. And Harvey's going to give us another Bloomberg article for us as well. So I will post that over in the forum, or he'll post it in the forum, I suppose. And I'll post it in the main League of Trader channel too, so you guys can check that out there. All right, you guys, I will see you back here next week, and I'll try to get this session up on YouTube faster than normal here today. So look for that in the next 2 hours, and keep hitting me up in Telegram if you don't see it by then, and I'll make sure we got it there available for you. And I'll post it on the tonyhansen.com homepage too, so you can check it out there.